Welcome to FinTech Guru. Here, we analyze the Indian stock market using official sources.
Just a quick reminder before we dive in, all the materials you'll see are strictly for study and research purposes. For any investment decisions, please, you have to consult with your CB-approved persons or do your own research. Okay? Again, welcome to Siva Presents FinTech Guru.
All right, let's kick things off with a question that sounds, well, kind of impossible. How can a critical, life-saving medicine just suddenly become 97% cheaper? It sounds like a fantasy, right? But this isn't a hypothetical. It's the real story at the very heart of Natco Pharma's recent massive legal win, and it perfectly sets the stage for everything we're about to cover.
So what's this all about? Well, that quote, a win for equitable healthcare, it comes directly from patient advocates. And they're talking about a total game changer of a decision from the Delhi High Court. The court basically gave Natco the green light to launch its generic version of a drug for spinal muscular atrophy. The original from Roche, it costs over 6 lakh rupees for a single bottle. Natco's version, just around 15,900. That's the 97% price drop. And believe me, this one event tells you almost everything you need to know about who Natco is.
Okay, so let's really dig into this, because that court case, it's not just some random headline. It's actually the key that unlocks Natco's entire business model and its core mission.
So here's the thing. Officially, their mission is right there, making specialty medicines accessible to all. And we just saw a crazy, powerful example of that in action. They are masters at creating affordable versions of really complex, hard-to-make drugs for things like cancer or MS. But the big question is, how do you take a noble mission like that and actually build a profitable company around it?
And this is where it gets really interesting, because this is the financial reality behind the mission. Just look at this revenue mix. See that huge slice of the pie? Almost 80% comes from export formulations. The domestic market in India, while it's important, is actually a pretty small piece. So what does that tell you? It tells you that while their mission makes a huge impact at home, their business engine is fired up by selling these high-value drugs in big international markets.
So how do they pull this off? Well, it all comes down to a few key pillars. First, they are absolute wizards in complex chemistry. They have these huge R&D centers where they basically figure out how to make these incredibly difficult drugs. And, super important, they make their own key raw materials, what are called APIs, so they control their own supply chain. Second, they have a razor-sharp legal strategy, especially in the US. They use something called Para-IV IV filings to challenge existing patents and be the first to market with a generic, which gives them a period of exclusivity. It's a high-stakes, high-reward game, and they play it well from their world-class factories.
Okay, so that's the playbook, right? Tackle the tough drugs, control your own supply, play hardball with patents, and go global. But does it actually make money? Let's flip over to the financials and see what the numbers say.
And the performance? In a word, strong. Fiscal year 25 was a record breaker for them. They hit their highest consolidated revenue ever, pulling in nearly 48,000 million rupees. That's a solid 16% jump from the year before. So yeah, not just a good year, a record year for the top line.
But here's where the story gets really good. Revenue is one thing, but look at the profit. It didn't just grow, it absolutely surged by 36%. This is so important because it tells you they're not just selling more stuff, they're selling incredibly profitable stuff. Their strategy is paying off big time on the bottom line.
And this table just puts an exclamation point on that profitability. I mean, just look at these numbers. The EBITDA margin jumped from an already great 45.5% to an incredible 53.3%. The profit after tax margin, same story, a big leap. And for anyone watching the stock, the earnings per share, a huge jump from 77 to over 105 rupees. These are the signs of a business that is just humming.
And you know what? This isn't happening by accident. The CEO himself, Rajiv Nanapani, says it in the annual report. These results are a direct reflection of their product selection and strategic focus. It's proof that the playbook we've been talking about is working exactly as planned. All right, so the internal picture looks pretty fantastic, right? Great strategy, great numbers, but, no company exists in a bubble. So let's zoom out a bit and take a look at the wider world that Natco has to navigate every single day.
And first, let's just talk about the size of the prize. Check this number out, $1.7 trillion. That is the forecast for the global pharma market by 2030. It's just massive. That's the ocean Natco is swimming in, and it shows you just how big the potential upside really is.
But it's not all smooth sailing. It's a really complex environment.
On one side, you've got these massive opportunities, new types of drugs, more personalized medicine, things that create huge demand. But on the other side of that coin, you have some serious risks. Governments are always trying to push prices down, you have trade tensions, and we all know how fragile supply chains can be. Natco has to constantly balance both.
So, with all that in mind, the huge opportunities and the big risks, how is Natco getting ready for what's next? Let's jump into our last section and look at their strategy for the future. Okay, this is a really big deal, and it's happening right now. The board has approved a plan to demerge or spin off its crop health sciences business. Remember that revenue chart? It was a pretty small piece of the company. The logic here is super clear. Let's get rid of the distraction, focus 100% on the core, high-margin pharma engine, and hopefully unlock even more value for investors.
Now, of course, no analysis is complete without talking about the risks, and to their credit, the company is pretty open about them. You've got things like a heavy dependence on just a few big blockbuster products. The generic space is a total knife fight. It's intensely competitive. Regulations are always changing. And of course, since they export so much, an economic slowdown in a place like the US would definitely hurt. These are the critical things you've got to watch.
And that really brings us to the big final question, doesn't it? Natco has this amazing, proven model. They win in court, patients win with affordable medicine, and the company and its shareholders win with fantastic financial results. So now, as they're getting even more laser-focused on pharma, can they keep that magic formula going, creating value for everyone? That's the billion-dollar question.
Thank you for watching this analysis from the FinTech Guru YouTube channel, viewers.
We really hope you found this deep dive valuable. If you did, please do hit that subscribe button and enable notifications. It really helps so that we can produce more videos like this. Thanks again for watching.